Go to Amazon or my blog site, investlocalbook.com, to buy my book today.
Hey everyone, it's Dave Barnett with the investlocalbook.com blog site, talking about local deal making, small business finance, business buy and sell. Wanted to tell you guys a story about a particular financing tool that I used with one of my clients back when I was a full-time loan broker, and it's called business cash advance. It's sometimes called merchant cash advance. And the client that I used it with was a restaurant, and they needed some money for some new equipment. And like a lot of restaurants, the performance financially wasn't that strong. The family that owned it, it worked well for them because they were basically 3 family members working in the restaurant, and the restaurant's profit would approximately be what these 3 people would earn if they were working for someone else. So it was a small little family business, and they probably had some sales, cash sales they didn't report, which meant that their profitability was reduced. Had a lot of personal expenses they put into the business, which meant that, again, their profitability was reduced. And this is common for small businesses to try to manage their income tax burden in this way. So they didn't really have very good financial statements to qualify for any kind of traditional financing. So what I ended up doing is I arranged for them to get a merchant cash advance. I think it was about $10,000. So what these merchant cash advance companies do is they give you a lump sum of money, and then they add a fee on top of that. So let's say that they give you 10 grand, they add a 25% fee on top of that. So now you owe them $12,500. But there's no fixed repayment term. You don't have to give them a certain amount per month. What they want is a certain percentage of your credit and debit card terminal sales until the entire $12,500 is paid back. So, and that 25% amount, that's just an example. The amount they add on could range anywhere from 10% to 40%. And then they're going to ask for a portion of your sales through that credit card terminal, which they arrange to have sent directly to them. So if you're doing $1,000 a week through that terminal, they could say that they want 5% of sales, which means that $50 is going to go to them. And they're going to continue to collect that money until they've received, in this example, their entire $12,500. So what's great is that they're only concerned, they have 2 concerns. What is your average monthly sales through your existing terminal? And you'll have to provide statements showing what kind of volume you do through your terminal, number 1. And number 2, if you don't own the building, they want to see that you've got a reasonable amount of time left on your lease. So if you got 12 months left on your lease, for example, and they figure that likely they'll get their money back within that time, then they're going to be comfortable with that. If you get out your calculator and work out the actual cost of capital, this is an incredibly expensive form of borrowing. If you pay someone a 25% premium and you repaid them over a year in equal weekly payments, if memory serves, it's actually over 40% effective interest rate, because you borrowed money up front, but then a week later you've already paid back part of it. So they get part of their capital back after only a week, but they've earned a great return on all that capital for the whole year. And in fact, there's an example in my book, Invest Local, where I talk about the unsecured pizzeria loan deal I did, where I explain how this sort of interest rate can be calculated. So merchant cash advance can be a very, very pricey way to get money for a business. The way that I made money off of it is that I had a relationship with a couple of merchant cash advance businesses, and they would pay me a commission on each one of these deals that I brought to them. And I think I only ever did 2. And because they were pricey, and I mean, I disclosed to people the reality of the situation about how much things actually cost. But for this one family-owned restaurant business, it was really the only way they had access to any kind of capital. If they had come to me a year or 2 later in my career, it probably might have been a deal that I might have looked at doing with my own money as a private lending, invest local type deal. But at that time, I was strictly brokering other people's money, and so I used the merchant cash advance. There is an article specifically about this type of finance method in my 15 business finance article package, which is available free to download by going to my blog site, www.investlocalbook.com. 15 free articles right there to download. You can also buy my book, Invest Local, which is all about local deal making and how to earn great rates of return off of doing small business lending, car loans, car leases, inventory financing, that kind of thing. And there's a new book up there for business owners called Credit Card Advantage. And they're all really reasonably priced. And I've gotten lots of great reviews on all of them. So please subscribe to my channel, follow my blog, go to my blog, sign up for my newsletter. And if you have any comments or feedback, let me know below. Thanks. Have a great day. Talk to you later.